Hello, hello, hello. Mic test. Mic test. Hello, hello, hello. One second, guys. Looks like we have an audio issue here. Let me fix that. Hello, 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 hello.
Hello, 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 hello.
Fixed.
Fixed.
So, hello, guys. Let's begin with the our very quick introduction before we actually go into details of the webinar. So, here is the beginning of our 138th edition of the Trading Opportunities webinar. So, welcome those of you guys who are live with us. So, those of you who are new here, my name is Nirav. I'm the owner of 50 Eyes Market Analysis YouTube channel as well as the 50eyes.com website where we conduct these webinars quite regularly. And these are actually weekly webinar series. We conduct one every Friday at 7:30 p.m. IST or 2 p.m. GMT. So just convert it to your time zone wherever you are situated. So far, we have conducted 129 webinars in which we have captured a total of 326 trades, including the three trade setups which were discussed live in the last webinar conducted on 23rd of August. We will look at all those trade setups while we progress with these charts, right? And other things. If you are interested in learning more of my work, you can check out my book for intermediate to advanced traders, Think with the Markets, available on Amazon's Kindle. And yes, here's the forecast accuracy we show up every time before getting into the webinar. It's a 6 year track record of all the public webinars and videos which I've uploaded on YouTube. And all of this has come out to be 80% plus all these years consistently, which is far above industry standards. It does take some time to load up. So check it at your own and later on. Right. So that's about it for our track record, etc., etc. Now coming to the webinar, we will be going through the webinar in the sequence Euro USD followed by CL, Gold, SPX, Nifty, and then BTC. We will first look at the setups discussed in the last webinar, then we'll go over what the current market outlook looks like. So that will be the way to proceed with this webinar. With that being said, now let me just quickly head over to the last webinar's recording and start off our discussion with the chart of Euro USD somewhere here. So this is the discussion from last webinar, and Euro USD I was having a long trade in it because the idea was obviously bullish. So at the time of discussion on 23rd, the price was at 1.11731, and the idea was that this market is expected to go higher at least to 1.11755. So if you check the whole section of the 129th webinar, starting euro discussion starting around 5:30 and ending around 9, you will find all those details. Here I'll just show you quickly a quick glance at the analysis. 11731, 1.11731, and target was 1.11755. Now obviously that has been hit, and I am also out of this market. I have booked the profits because we were trailing it. So just for the sake of making things very clear, this was the time of discussion, 23rd August. One second. Let's just check with the price, 1.11731. And here is the resistance at 1.1199, whatever, 1.12, sorry, actually. And as you can see, the market did go higher. I was trailing it because we were holding longs from lower levels. This was the position that was held for a few weeks. So that trail was hit somewhere here. So I was not able to take the extreme extent of this move. But since we were long beforehand, that was not much of an issue. Now let's look at what this market is currently suggesting to us. By the way, just for the sake of record, what I can do is quickly go to the Euro channel here and show you what we were doing here live during the market sessions. So here is the stop loss trail to 1.0641 above entry in free trade now. That was the post on 21st, 27th, and then 23rd August. Trail moved to 1.11, and then 26th August. Where is that trail getting hit? Yeah, there it is. Put profit on all longs as the trail was hit. So trail was around here 1.11 something. So it was hit. The channel was broken, and hence we exited in profits. Now coming back to the current chart on screen here. Hello Raghu, good afternoon to you. And I forgot to ask the audience, is the audio clear at your end, guys? Let me know in the chat. And of course, I should also check it at my end one more time. Yes, it is working fine at my end. So as I was saying, continuing on with our discussion, what we were checking out so far was the upside movement in euro. Has it come to an end, or is it having some more upside? So for taking that or answering that question, let's have a look at what we are looking at in the bigger picture. So in the bigger picture, from this point of reference, which will be the starting point for this analysis, we have what looks to be WXY up kind of movement. We may call it as a W, and we may look at it as an X here, and X can also be marked as continuing. But the major important point which I want to point out is that the Y leg which comes after the X has a minimum requirement to go over the last high, in which case it should go over 1.11409. And as you can see over here, it has already done that. It has already gone over 1.110. Why is it coming different? Let me just show. Yes, 1.11392. Whatever this high is basically, right? I am on this data feed, and if you are using a different data feed, the price will be a little bit different. Thank you for the clarification, Raghu. That's good to know. So as I was saying, because the minimum upside movement is complete, there is a possibility if the Y is complete, we can see the market heading lower, because overall it could be taken as a bigger ABC kind of count. A here, B here, let's call it a circle degree A, circle degree B, and a circle degree C. So this could be a possible count here, and that's the reason I exited the longs instead of trailing further, right? So that's the bearish possibility. However, that is not the most likely scenario at this point in time. We do have other counts here. Let's have a quick look at them. So the other variation for this count is basically simply that from this point of reference, we have the W here, and X is either complete here. That was the H1, which we just discussed. Second variation is suggestive that this is still continuing in itself as a kind of a flat correction, because wave X is a three-wave corrective structure. So it could be itself a flat, it could be a triangle, or some other variations are also possible. But long story short, we still have the possibility that X is continuing. And if that is the case, then this downside movement will be short-lived and will be followed by one more leg to the upside. So as such, the conclusion comes out that both scenarios are possible at this point in time. Both an upside movement as well as downside movement is possible on this counter, and it's a kind of a wait and watch market. I do have some short term setups here. One specifically being to check out the price movement around 1.10055. So if the market holds this level, then there is the expectation that we can see a revival of the upside movement. Just an expectation, nothing concrete. It's just a possibility to look out for, and I just wanted to point it out before we end this discussion. And obviously, guys, if you have any doubts or questions regarding this chart in the realm of our discussions, obviously, then do let me know in the comment section. Also, do keep in mind that those of you who are interested in following these webinars live, you can follow us on our Slack, and you have to send or request details for that. Give me a moment break here. I'll be back in a minute. Hello, hello, hello. Hello, guys. Hello, Marco. Nice to see you here again, one of our regular viewers. So, guys, as just discussed euro, let's now move over to the chart of crude oil, and let's see what the market has done so far. If you guys remember, I was holding shorts, but the advice was not to add further shorts. Here is the look on the chart from our last webinar. Here's the chart of CL as discussed in our 129th trading opportunities webinar. And as we can see, the market was expected to go lower for the wave C. The current continuation was within the wave B. And after the B completion, we were expecting a down move. However, there was also the possibility that this B could still be continuing sideways. And based on that, I suggested very clearly not to enter any new positions and just wait and watch. Since I was already holding short for quite some time, I was also just waiting and watching my position. And here is the crude oil chart live on screen. So as you can see, the market has sort of formed a possible triangle formation here with the wave B circle completing possibly. If that is the case, then we should now see a downward movement. We should take this market at least lower than this level of 72.168 minimum. That level should be taken out to the downside. And once this level is taken out, our minimum requirement will be considered complete, right? That is the main theme over here on WTI's crude oil. At this point, I can look to add more shorts here. Probably I will later on for scalping, but the positional trade which I've been holding for quite some time remains intact. I'll consider moving my stop loss a little bit lower to 78.6. I think it is already somewhere there itself. But we'll check that. Technical stop is, as I said, is coming around what is this 80.274. But I think it will be wiser to keep it around 78.60. It has been a long time since we have been holding this short, or I've been holding this short. I mean, right? And furthermore, what we can expect is this market is moving inside a triangle in the bigger theme, as you can see with this white trend lines. So this bigger triangle is expected to continue lower, and since this is in the wave D of the bigger triangle, we can see a movement which goes very near to the wave below, that is very near to 68 levels. So if the market continues to fall from 72.168 and lower, it can go very near to 68 as well. That is also a possible level for this market. So we'll see. I'll probably just trail once we cross 72.168. That is what I think on this counter. Nothing much to add here, and just a quick idea here below 72.758. I will look for some scalp shorts, but then again, these are things you need to know how to do the analysis if you want to do them. See the lessons in live is an honor. Oh, thank you, Marco. That's very nice of you. And yes, before we follow over to the chart of gold, here's a quick request to you guys. Our views have kept on declining in the recent webinars. Even the last one did not cross the 500 mark or even 400 mark. So here's a request, those of you who are regular viewers here, kindly continue sharing the content as much as possible if you are members of some trading forum and WhatsApp groups, Telegram, or whatever you guys are doing, social media. Do not forget to share it with your audience or your connections, right? That is vitally important because declining trend is not something that allows investors to jump in. Just kidding. You get my vibe. So, anyways, that's about it for our discussion of CL. Now, heading over to our chart of gold. Let's see what is happening here. So, this is literally not what we expected. And let me just come back to this chart after I have shown what was being said in the last webinar. So, here is the chart of gold. And this was a discussion in our last webinar. The market was around 2515, and we were expecting that this market will probably continue sideways a little bit or go straight up. Our bias lead towards the upside. Let me just play this video with mute. Yes. So this was our bias that the expectation is that the market will continue to the upside. Obviously, we already know that the wave two can also continue sideways, but in both cases, it was a swing long possibility as per our understanding. Now let's look at the actual chart right now. Here on screen we have it. So as you can see on this chart, we have a little bit of an update here. We are assuming that wave 1 is complete here and wave 2 is either complete here or it is still continuing sideways. So my primary bias now is that it is continuing sideways, most likely as an A, B, C here. And once this C leg is complete, we expect that this market will go higher. So that is the primary bias on this counter. Wave 1 circled, wave 2 circled, sideways is continuing, and then we look to see upward movement. However, within this short-term move, we do have a setup here itself. Since this is ABC is a flat structure, and within this ABC flat structure, we tend to have 3-3-5 formations. So if this analysis is anywhere near correct, then we are within the wave B, and within the wave B, let me draw a rough outlook here. Let's draw it on top of this chart itself. So within the wave B, we will have a three-wave progression. So here is the wave B, here's the wave A of the B, B of the B, and C of the B. So we can label it like this. So my current setup is I personally am holding a small amount of long positions here. And the setup basically is that I was looking for this C leg to go up or take the market up, right? And that's why I was saying that it is not really moving as per expectation, although as long as it is above this trend line, it is more or less not an issue. So let me just draw it properly here with a different color. So our setup remains the same as long as the market holds above the yellow trend line. We expect that this market will give us a C leg to the upside, and technical stop obviously comes around here. 2494 is our sort of invalidation for this zigzag for wave B in this flat circled wave 2. Right, might be getting confusing. What I'm talking about is the zigzag pattern of this wave B in this circled wave 2. Right, so that's the relation here we are expecting. Also, I might look to add a little bit more longs once we see the actual breakout. But until then, whatever position I'm holding is more than enough. I don't want to add anything more. So that's about it for our discussion on gold. Nothing much to add here. If you guys have any doubts or questions regarding this chart, you can just post them in the live chat before we move over to our next chart of S&P 500 followed by Nifty and BTC. So here's a chart of S&P. Let's have a very quick look at what was being said in the last webinar on this chart. So the last webinar, which was conducted on 23rd of August. Our main theme was that, 1 second here. So main theme was that we were expecting upward movement on S&P's counter, right? The idea was that the wave 4 has completed here and we are expecting a upward movement for the wave 5 as an impulse, of course, right? Let's look at the actual chart because it has not really quite moved as per our analysis precisely. So here was the analysis on 23rd of August, right? And here, as you can see, the market has gone sideways, sideways, sideways. And let me just give you a quick update of the count first before I explain what is really happening as per our understanding. So the idea is either we are looking at wave 1 and 2 and 3 here. So the wave 4 is currently in play, and wave 4 generally goes kind of inside a boxed range, right? So this is the moment inside the boxed range, right? And as you can see, the market has sort of respected this range a little bit, actually perfectly, because whatever movement we saw below this range was just a spike. So this is 1, this is 2, 3, and 4, and we expect to take off anytime soon. But do keep in mind, wave force can sometimes take a little bit more time, so it can propagate within the range. Maybe give a minor expansion to the upside, minor expansion to the downside, and then take off. So that is one thing to be kept in mind. But overall, my bias remains the same. The count remains the same, and the setup remains 1 up, 2 down, 3 up, 4 down, and we are expecting this fifth leg in the upward direction. Let me see if there is anything more to add here. There are some alternate views, but more or less they are still suggesting the same thing. Yes, we do have incoming resistance at 5686. So if our count is correct, we may see some resistance at 5686. We may see some minor profit booking around here before the market goes lower, right? So sorry, the market goes higher. So basically the theme remains, as long as the market is within the wave 4 range, that is above 5548, this remains the count, this remains the active count that the market is going to go higher and touch 5686 or higher levels, right? Above 5686 it will open up to newer upside possibilities, which we are not very keen on discussing right now, but as such, it's a bull trend, so it can go much higher. So that's about it for our take on S&P's 500. With that being said, very quick request to you guys who are live with our webinars again, that if you are enjoying the content, do not forget to hit the like button, and of course share this webinar with your friends and colleagues so that we can get a much wider following and reach much more people. With that being said, let's now head over to our chart of Nifty, and here's a quick look at the discussion from our last webinar. And the idea was that we were in an impulse, as you can see, 1 up, 2 down, 3 up, 4 down, and this is the fifth leg up. We were expecting that this market will go higher. And the price at which this analysis was done was 24,830. Now the market has, of course, gone higher, and let's look at how and what's our take on this chart at this point in time. So 24,830, and the market has gone to 25,247. Almost at the high. So it is literally performing as per our expectation. And the updated take is that we are in an impulse, right? And within this impulse, we are in the circle 1, circle 2, circle 3, and circle 3 is, as per our analysis, still forming. So long story short is we have a huge upside remaining on this counter if this count is anywhere near correct. Because as you can see, this circle degree is sub degree of the Roman 3, and which is a sub degree of double dot 3, right? So long story short, multiple upside legs are remaining on this counter. Circle 3, circle 4, etc., etc. You get the point here, right? So we look for basically breakout longs on this counter, and as long as the market remains above 24018, this technical analysis remains valid, or this is what you call the invalidation point for this count on Nifty. So this is one of the three analyses which worked out in as per our discussion in the last webinar. First one was Euro Nifty, and then the next one is BTC, which again went up as per our discussion in the last webinar. Right. So again, I don't have much to add here. I think we have some upside targets, but they're kind of irrelevant at this point. This market is already at in new lifetime highs, and from here it can give exceptionally big bull leg. There is no what do you call doubt or question about it. And in these situations where we are in a three of a three, targets are kind of not that relevant anyways. Right. So again, if you guys have any doubts or questions with this, you can just type that in the live chat. Otherwise, we'll move over to our next chart of BTC, which will also be our last chart in this webinar. So here it is on screen now, our recording from last webinar. Let's check what was being discussed on this chart of BTC. So our idea was that above 62896, we can see one more upward leg, which can take it to 64,000, 66, or even 68,000. The ideal target was 68 plus because we were doing some 1:1 calculations, measuring this leg and projecting it from the end of this leg. But the main theme was above 62,896. We look for breakout longs. So here is the live chart on screen now. So as you can see here, 62,896 was breached. The market did go up and it took resistance at our marked level of 65,080-ish level. I don't know if this was discussed in the live webinar or not, but it was updated in our Slack group. Roughly speaking, 65,180. So anyways, from there on, this market has continued to propagate sideways. At this point in time, we expect that this market may be giving us a complex correction, perhaps a W. One second. And X and a Y. That may be the count at this point in time. And it is also possible that the X is complete and the Y is complete here, and this market may just continue lower. So at this point, we do not have a setup. The only clear setup was breakout longs. It did not give us much of a move, to be precise. We were expecting much higher levels, but it stopped its move around 64,500-ish level. Right. So I wouldn't say we had a spectacular movement or clear trade here at all. And at this point, again, as I mentioned, we have two possibilities, and it isn't very clear to me which one of this is this market following. So as far as the upside possibility is concerned, we do not care for adding any longs as long as we remain below 64,355. Once we see a move above it, only then we can say that perhaps this Y is continuing. And as far as the bearish count is concerned, we may consider some bearishness below 56,500, let's say, but that's not a confirmation for anything. Wave axis can also go there and then continue up. So there is no clear setup for downside. Obviously, breakout of the last low around 49,700 is something, but that's too far, and that's not the kind of trade I'm interested in. Only upside breakout is a good risk to reward basis trade setup, and that too from a shorter time frame or scalp perspective. Well, with that being said, I guess it's a wait and watch market, and we have also discussed all the charts we generally discuss in these webinars. So if you enjoyed the content so far, do not forget to hit the like and share this content. Those of you who want to get these updates live, they can always join my Slack group. The details are in the description of this video and are also scrolling at the bottom of the screen. You will have to send an inquiry to via our website's contact us page, which basically is 50as.com/contact us. Select the subject matter as requesting details for Slack private group. And that will be about it for this webinar. Thank you for those of you who joined in live, especially Raghu and Marco, who were also active in the live chat. And those of you who are watching later, again, make sure to spread the word and share this content as much as possible. That is highly appreciated and required given the poor performance over past work. Right. With that being said, let me say bye for now, and I'll see you guys in the next one. And yes, you're very welcome, Marco. Take care, guys. See you in the next one.